Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, August 15th, 2024. It's 10:14 a.m. Eastern Time as I'm starting the video, and here's what we're going to do in this one. We're going to start out with a brief overview of the shorter term charts, the 60-minute charts. Then I want to really focus most of the video on the longer term big picture. We're going to look at the weekly charts. And what I'm going to do, of course, cover the indexes, and time permitting, I want to go through, because I've done this already, taking a look. I do it almost every day, but I want to go through the top 25 components, or as many of those as I can get in the video, of the Nasdaq 100. As I've often said, and you can look it up yourself, it's usually the top 5 alone account for the bulk of the returns. You go the top 10, you're over 50% of the entire index because of their market cap weighting. But if I go down to the top 25, there are still big and important companies in there, like Qualcomm, you have Costco, some that I don't always cover that aren't the big tech, a lot of big biotechs in there. And it just kind of paints the bigger picture of where we are technically. So I'm going to start here again on the short-term charts. I just want to reiterate, nothing has changed in my outlook. I think this is today, I believe, is the sort of the inverse of Monday of last week. Monday of last week, we had that bottom in the markets, and it happened in pre-market. That's where we covered shorts, reversed along. We gained 2/3, almost exactly 2/3 of this bounce, as I often do. Got in a little early, exited long, so I'll get to that in 1 second on QQQ. But this is where it happened in pre-market, and then the reversal started. And here we're at today. So let me just summarize the 60-minute chart of the futures. There was that downtrend line. They did take it out. Props to the market for that. I am sitting tight, as I told you I would. My trading plan was to scale up to from about here when, gained the longs as we did, closed out there, started scaling in short from there up to the trend line. And I said, and I'm holding off for now, not above, because that in itself is net bullish. However, what I'm going to show you in this video is kind of bigger picture stuff, and especially how we close the week. And I'm betting that this is, again, it's not a bet. It's just an intuitive read of the charts that this is today. I believe it's the inverse of this. What I mean by that is we had that, final thrust down on Monday. If you read about it, it was a lot of unwinding of margin. There was, the hedge funds that were at their heaviest margining position, I just read recently. So there was a lot of unwinding of that. There was the unwinding of the yen carry trade, which you probably read about, and other things like that. And so what today feels like and looks like technically, again, whether it's today or we're going to get another day of it, it appears to be that in reverse. Remember, we had a lot of shorts, longs getting unwound, shorts coming in. At the bottom, undoubtedly, a lot of, going the other way, where you went from a extremely record low shorted market up heading into the highs, as I pointed out recently. One reason we were short off the highs. And then a huge surge up in short interest and kind of things going the other way. So, all right, now let me just tell you what I see here clearly. So we still have in QQQ the uptrend lines, the near-term uptrend lines in QQQ and SPY, which will trigger the next objective short entry. And so at that point, although I'm not adding right now on the strength, I will add on that breakdown. I have a comfortable position, but plenty of room to add and plan to add, especially if these developments occur. A break of that uptrend line and then a break back below this downtrend line right here. Remember, this is the downtrend line off the recent highs. You've got the negative divergence now forming and getting even larger on the 60-minute charts of the futures here. You're still well below that 61.8 fib on NQ, which we're looking at here, the Nasdaq 100 futures. This is ES, the S&P 500 futures. Same very clean, well-defined uptrend line. And in my opinion, what I call dangerously steep. What I mean by that, the slope of the line, it's pretty sharp. Just like you had a dangerously steep trend line there with an explosive rally once it was taken out. And that's what you get when volatility is high. You get these big moves. When you're going down, if you're new to this, you think it's never going to stop. And when you're going up, same thing. You think it's never going to stop, and then all of a sudden it does. And when volatility's high, when the train changes directions, everybody jumps on board and it goes the other way. And that's how this thing works. Let me put up some fibs here on the futures. Kind of fibbed out here lately, running all these Fibonacci retracements on various time frames. But same thing from the move to the highs and lows right there. You're at the 70, coming up on the 76.4 fib right there. But either way, watch that trend line right there. And let me get over to QQQ 60-minute chart. I'm getting dug in a little bit longer than I wanted to on these 60-minute charts. But just to kind of recap it, it was in pre-market. Recovered again after gaming this thing down, plus reversing here and gaming the bounce, the first bounce, and then gaming the second one. That was 8% rally up to right here where I revised it. Had initial targets. Oh no, it was right there. Okay, so it was actually, I take that back. It wasn't. It was 7.25% on a 12% rally. Yeah, almost 2/3 of the rally milked on the long side. And then again, a scale in at this point, and a scale in weighted that I'm waiting to add to based on those trend lines breaking. So when we go to the daily chart, this is it. This is the trend line you're looking at right here. If you want to replicate this on QQQ, the uptrend line that needs to go to trigger a sell signal in comparable trend line comes right off the low, and it captures a lot of the recent candles. It's a very valid, well-watched trend line in my opinion. So now let's just jog over to the long-term charts, and we'll talk about that. So QQQ, the most important index in my opinion. Just to recap here, these are the price targets that were laid out in late June, along with a market top range that I said would most likely cap the advance. We came within 1.5% of the top of that. And then went on to trigger sell signals on breakdowns of various uptrend lines, multiple sell signals, a bearish engulfing candle on the daily, et cetera, et cetera, et cetera. We went on, we hit T2, slight overshoot in the with that big pre-market plunge on Monday to open down. We reversed there, got up. I said we were below the 200s, but we would most likely recover those as traders would step in and buy, which they did. They bought the 200s, and when they saw the 200s were regained, the market rallied. Let me go to this cleaner board here. So what I want to show you, it's cleanish. I've got a lot of levels on here, but this one right here, let me replicate it on a board without any other lines. But that's the trend line off the beginning of 2023 lows right there in the beginning of the year when we covered shorts, went long. All the tech stocks were my favorites. Apple and Amazon listed as my two top picks, and overweighting in the fangs. And that's when the rally really started for the Nasdaq 100. Okay, I have trend lines annotation on all these boards. I'm just going to pick this one and replicate that trend line coming off that January 2023 low. Coming in here, capturing, of course, that's the starting point. Capturing those reactions right there, and then this one recently there. And so this is where we're at. So we had a breakdown of the trend line, and we were back testing, as I pointed out recently. At this very moment as I speak, we're above it. Again, as a trend or swing trader, which those targets that I laid out late June were on a weekly chart and made very clear they're long-term swing/trend trader targets. Those if you're a longer-term swing or trend trader, this is your overriding. This is a chart you want to trade off. This time frame, you can incorporate the daily, or like I do, you can use the 60 to try to hone in on your exits and entry points, especially if scaling in, scaling out, like I like to do for those longer term swing trend positions. I rarely take an all or none, unless it's a point where I see like a time to hey, this is a selling climax, a near term selling climax. Like we had last Monday, that at that point you have to move fast. If you wait a day or two, you've missed out on the bulk of the returns. So those are the long-term targets, and here's that simplistic view right here. If you take that trend line, we'll make it nice and thick. I know I have some other ones on there. So again, a weekly chart. Today we're above there. Today is Thursday, and it's Thursday morning. We're not even an hour into the trading day. So if we continue to do this until tomorrow or even hold up here, guess what? That trend line's regained, and I can't spin that as anything but net bullish. However, as I suspect, Today most likely be a buying climax, kind of the last short covering hurrah and surge. Then we will most likely see this a reversal, and all we have to do from where we're at right now is drop down roughly 2.4% to close on that trend line. If we close on it, then what you're looking at, imagine this is red here, you have a red candle, it's going to look like that. Or even a green candle, and that's simply a back test on this weekly time frame. Again, 4 p.m. Friday. Now, if you close down through here, it's going to be rejection. If you close below the trend line, a lot like what Tesla did. Remember Tesla recently? I'll go over there. Tesla it was challenging its bear market downtrend line. And I suspected it would fail. Covered it at the time in real time as it was above it. This is the bear market downtrend line. Tesla peaked back in 2021, had an intra-week pierce, only to get rejected that week and close back down below the trend line. Second week, it tried to get up there again, got rejected, closed back below. These are red candles. That means you close at the bottom part of it right there. Third week, another attempt, third attempt, and failed attempt to get back below there. And then what happened once the market realized, or Tesla traders realized, that it didn't have enough oomph. There weren't enough buyers on the other side of those breakouts to let the breakout stick, and it failed. And so if you bought if you were the one that bought that breakout initially, you were immediately followed by a 33% loss on your trade if you just wrote it out to the pullback there. So anyway, that's what I'm looking for. It's what I suspect will most likely happen. It hasn't happened yet. If it does happen, again, I'm talking about QQQ, then that will be a sign to that most likely my read on the chart's correct, and to depending on where I'm at, right now I'm focused on proper position sizing and risk management, so I'm not adding on this uplift. If I didn't have anything, I might take a shot there. But as I said, I'm waiting to see those trend lines break and the reversal come today. And then especially Friday, like I said, I'll determine whether to go home short and how short to go home, depending on how these weekly charts close. And again, I want to get to the big market leading stocks. It's not always about the indexes. I think some people get lost in that. Maybe I overdo my analysis, but as you know, I'm very granular. I look at every single day. I watch at least the top 5 or 7 in the Nasdaq 100. I watch all 11 sectors in the S&P 500, and quite often I'll drill down through sometimes all 100 stocks in the Nasdaq 100, or the top 30 or 40 in the S&P 500. I'm a chart hound. Let's sit here and do this all day long. So we're going to do that right now. So there's kind of the gist of it as of this very moment, but it's Thursday morning. We're a little bit above that uptrend line, the primary uptrend line there. Now let's look at the rest of us, meaning the rest of the Nasdaq 100. Okay, Apple. I've got a lot of lines here. Let me see if I have a clean. This is probably the cleanest board that I have. That line should be up a little bit higher there. Yeah, to come in and catch those 2 reaction lows. This is Apple's primary uptrend line, the bull market, secular bull market uptrend line. This is a super significant line. It comes off the 2003 lows, and it has a lot of distinct reactions since, including back here at the end of the 2023 drop when we went long Apple right there as a top pick, and came and tested it here. It had this brief breakdown, but there are enough reactions to validate it. It came down to support there, and I'm sure this was a lot of Apple buy programs, which can and will. Remember, the stock buybacks in Apple, we've never seen anything this big in history. The amount for any company that they're buying their shares back. So it's going to distort the technicals a little, but at the end of the day, I do believe that's still a valid trend line. And at the end of the day, if selling can overwhelm those buybacks, then it tells you what's going on. And we've already seen, since they've announced the last buybacks, this stock has dropped from high to low. And that doesn't include the intraday drop, which was a little bit lower last Monday morning, 17%. Again, I'm just going to cover each of these on a weekly chart. I'll be relatively brief. There it is. That is where we're at right now. And so it's if we close on or below this trend line, then that was an intra-week spike above. And because this was a breakdown last week. So I'm watching this one. And you can see big multi-year divergences. And you might say, oh, Randy, those divergences have been building for a while. They don't matter. Well, they mattered right here. That was a drop of, you know what, I have it on a board measured out somewhere. Here's all the drops off divergent highs on the weekly. I've covered this many times in the past. 62%, 45, 34, 39, 35, 32 recently. And this is the biggest divergence we've seen in years. There's never been one of these divergent highs that you can see here that didn't play out for, you know, a double-digit drop. Even the smallest ones were 15, 16%, and so forth and so on. So that's all I can tell you is divergence is not a sell signal, but it's an indication a trend change is likely. And then when the sell signals come on breaks of support, trend line, price support, and really, again, you know, this one, like everything, came in, tested the 200-day moving averages, where I said they'd buy it, and they bought it. That's where they buy tech stocks, especially Apple. Also price support there. So the bigger sell signal is going to be when all these guys take out, and the majority of them take out the 200-day moving averages, which on this weekly chart is just a 40-week moving average. All right, let's run through the rest a little quicker. Microsoft is done, you know, on a sell signal on the weekly, and that's what I wanted to, again, talk bigger picture. So I had this initial trend line, which we broke down and back tested, right? And then I gave you, this is weeks or months back, what I called a BOD, or benefit of the doubt trend line, which is, you know, if you have two in close proximity, you want to give the benefit of the doubt to the second. So by every metric, Apple, after putting in that big divergent high, Microsoft is well below the trend line. And, you know, again, first, you know, it's visiting, went undercut the 200-day moving averages briefly, but as I said, you're going to get that. Some, as the market drops down to its 200 days, some of the market leaders are going to undercut them a little bit, overshoot them and come back up. Others are going to, you know, hit them and bounce, and the buyers will step in there, and some might reverse a little bit above. So collectively, you want to look at them all. Either way, price-wise, again, I just wanted to reiterate, it's been nothing but red sticks. It's just a counter trend bounce right now, and we're still well below the uptrend lines. Of course, you want to see these recent lows go, and in fact, I'm going to add a line now. Let's add it to the recent lows. Why did I do that? It's not just one low. Traders will watch that low. It's going to be a big low, but you also had a spike down, two weekly spikes right there, and you have a candlestick high there, so that's support as well, and that's a magic number. In fact, I'm going to set an alert. It's really just basically an alert under the last week's lows. Should do the trick, and you see my path. You know, this is where Microsoft's going. So I just wanted to give a check mark on that one, already in place, no matter what happens this week. Apple to be determined by tomorrow's close. NVIDIA, again, I laid out when I gave you those market top ranges on the S&P 500 and Nasdaq 100, along with my long-term price targets. I did the same for NVIDIA. We were up here at the time before the market peaked, or right here maybe. Got our sell signal there on the weekly. Of course, we had sell signals on the daily, including but not limited to the bearish engulfing candle and shorter-term trendline breaks. Went down. We hit our first target here, and as expected, came in. Right there is the 200-day moving averages. The dip buyers bought. As expected, and it's a reaction off my initial target. So we need to now break the recent lows, and that'll open the door to the next targets, T2, T3, T4, etc., etc., etc. So this one for the week, it would take a lot. We'd have to turn around, and it could happen, but it'd be a 15% drop just to get us to the trend line. So I don't think we're going to have any type of again, weekly, longer term additional sell signals. Remember, we already had one here, so it's already broken down. It's well below the breakdown of that rising wedge, that trend line there, and still well below the bearish engulfing candle put in back here at the highs on the daily. You're not seeing it on the weekly. And so that's NVIDIA. So that one, like I said, I don't think it's going to give us any clues this week. Alphabet, I'll certainly be watching. This is a weekly chart, of course, again. Big divergent high right here. Beautiful, well-defined, clean uptrend line. And again, it's a weekly chart. It might look like a little trend line. That comes off the early 2024 lows right there, right? And this is the trend line we've had all year. Took us right down to the button. And this is a level I've already had on here, to this secondary trend line right here, which we hit, and we're holding right above right now. So by all metrics, this put us on a longer term swing or trend signal. It's one reason we gained this leg down, which I'm viewing as an initial leg down. Hit the 200s to the button. I think you can see them here. If you can't, I'll brighten them up a little. Again, remember, a 40-week moving average is the same as a 200-day moving average, and I'm going to make them a little brighter. So you can see, this is the biggest drop this stock has had in years. 5 straight weeks of selling to take it down 19, almost 20%. Actually, intra-session was in that morning, easily down full 20% off the highs in just 5 weeks. And to the 200-day moving averages and uptrend line support. So, of course, they bought there. We bought there. But the million-dollar question is, when does that level go? And so I'll be watching it this week. To go on tomorrow, it'd be a big reversal. We'd have to come down pretty hard today from where we're at right now, and or tomorrow, just to get us down there is going to be about 5%. Again, to keep it safe, if you want to just do this and make it very simple and just kind of even walk away from the computer, set alerts under last week's lows on a lot of these stocks, because when that level goes, you're going to have taken out. Remember, a lot of these stocks bounced off key support levels like the 200 days or trend lines or price support. And so that'll be your next sell signal. Whether we bounce for another week or two, that's not going to change anything for me technically on the alphabet. Absolutely not. This is a breakdown. We're so well below it. I don't even have any resistance anytime soon. So it can go up here, here, here. If it starts getting challenging the highs, then yeah, something else is going on. But as of now, like I said, I'm just watching those recent lows. I have to queue up QQQ again because I lost my watch list on the side. Here we go. Okay, that was, where were we at? We were on Alphabet. Here's Amazon. Amazon, beautiful uptrend line, again, off the same level. Amazon along with Apple, my two top picks in the beginning of 2023 right here. That's that same trend line from there. And you can see, and the 200-day moving averages were clearly taken out. Like I said recently, this is the most bearish of them, big tech or big FANG, Mag 7, whatever stocks you want to call it. Where are we at today? A back test. This is a key support level I've had here, about 176 and change. And we're back testing that level right now as I talk, I should say. And the 200 days. So what you have here is pretty much at this very moment, it's recovered. It's moved back above the 200-day moving averages / 40-week moving averages. And it's moved back above the trend line. So this is why I'm doing this video. I see a lot of importance. If I'm right on this, and this is a little last kind of final hurrah, just like Monday's little last plunge down was a final hurrah for the move down, then we get a reversal. It's going to take a half decent reversal between now and the close tomorrow, but that's what I'll be looking for. And as I like to say, the redder the better. If we park on the trend lines, and it's simply a back test, and that's still an objective short entry add-on. If we go down well below them, that's going to be quite bearish. If we close above them, let's say we build on this rally, guys, and we take out 176, and with conviction, and we park up here, well, it's going to be hard to build a bearish case. I'm not going to continue to add to any swing shorts right now. I'm giving it some room because, like I said, we're still within very close proximity of where you figured I'd scale up to, and then I told you I'd sit tight, not continue to add to those positions. If we keep going up by end of Friday, especially in the next week, then I'm going to start being concerned where to scale out, because I'm talking about swing / trend positions right now. All right, now next one, Meta. You can see here, I know it's a busy board, but let me just draw the lines that I'm looking at. You've got a trend line here off the October of 2023 lows. That was also a lot of my trend lines. That was a very significant inflection point right there. And you have a very clean, super well-defined, lots of reactions on an uptrend line with a solid sell signal right here, the week of ending Friday, July 19th. And we're now, we had a back test here 2 weeks ago. We're back testing again today. That back test today, any equal or marginal new high over that high from the week ending July 12th. is still a divergent high. So nothing's changed in the technical posture. Sometimes you break down and never look back, but quite often you break down and back test a trend line. So like everything else, Meta bounced off the 200-day moving averages. Again, I sound like a broken record, but I couldn't overemphasize the importance of the 200s, a week ago, a week and a half ago, when we bought them. And now you can see how that's where they come in and buy. When you have collectively a majority of the market leading stocks and or the indexes are hitting those 200s, especially when they haven't been visited in a while. But when they go, that's a trend change indicator. Here, back here, you turn off all the lines. You can see when Meta was under it, when it took it back, it exploded. That was the biggest green weekly candle, possibly, if not in years, ever in the stock. That's one single week right there. From low to high on that candle, let me just measure it. That's 34% on a weekly candle from where the stock was at the low to the high of that candle. And you think it's mere coincidence, not that it coincided with the 200s being recovered. Likewise, it was cutting through the 200s there, kind of a little bit below, a little bit above, a little bit. When it clearly took it out and had that last hurrah, last attempt to back test it and try to get above it there, you had the biggest red candle in years, if not ever, and that in a single week from high to low, 30% drop. And so I'm just trying to show you it's not mere coincidence that happened when the 200s were clearly taken out there. All right, so it's a big level and levels to watch. And I'm highlighting, as I did 2 weeks ago for the bullish case, now I'm highlighting for the bearish case. We've had tests to them, and now I'm waiting to see those things go, and then that will sharply increase the odds my longer-term targets, bearish targets, are going to be hit. Gonna go back. I'm just loading my watch list off the screen to the right. You can't see it here. I'm going to go a little faster. Broadcom trend line comes off the October lows, like I said, October 2022, which was also, so October 2023 was a key level. You can see reactions there, and also in October 2022. That's the primary trend line. We had an intra-week cut, but as I said, all that matters is how you close the week. So what did it do? It came down, hit the 200-day moving averages, and they bought the crap out of it, right? And we rallied up. Now we're at this downtrend line here. So bottom line is it's a success. It's a pullback and successful defense of the 200-day moving averages and the primary uptrend line. So this, guys, is a level to watch. When you see a solid weekly close below the trend line, and now the 200 days are my BOD levels, benefit of the doubt. Why? Because they're just below. So, some traders are going to look at trend lines, some are going to look at the 200 days. So, but when they're both gone, then you can say good night, Broadcom. Tesla, I've already covered Tesla quite a bit, but I'll cover it one more time. Weekly chart, that's all we're focused on here. Bear market downtrend line, there's that rejection I just covered, and we're below it. There's not much more to add on that one. Nor do I, this one slices, this one's been grinding around in the 200s. They're not as important. I've said this many times in the past. I don't put blind faith in any set of moving averages. Some traders love the 50, some love the 200, some love the 200 exponential, some love the 200 simple, some like 100-day moving averages, 130. I've seen it all. And every stock has its own, you can play around, and sometimes I will. I'll get in here and I'll change the parameters and I'll see at which moving averages fit. But when I see a stock cut through a moving average like it's not even there, like a hot knife through butter, up, down, it doesn't mean much. So I just want to say that that's my thoughts on Tesla. I don't have an opinion on this one. And nor do I have a dog in that fight right now. So just watching it and just showing you the ones that stand out. And so far, most of them, I showed you some very significant technical levels that we're in close proximity to. Costco, bearish engulfing on the weekly there, break of the uptrend line, coming off a big divergent high. Needs to take out the weekly recent lows. Costco hasn't visited the 200-day moving average in some time, so we'll look for that. If and when that happens, there's some price support around there. Might step in and gain a reflexive bounce off Costco. And it's one of the top 10 holdings, by the way, of the Nasdaq 100. The weighting isn't nearly as much. Market cap-wise, it's a $383.6 billion company. That compares to Apple at $3.4 trillion, Microsoft at $3.1 trillion, and NVIDIA at $2.9 trillion. So remember, the Nasdaq 100 is a cap-weighted index. So it moves the needle, but not nearly as much. And you can see this is where it's coming to before all said and done. At minimum, this uptrend line right here, this off the late 2018 low. No, all the way back to, yeah, we'll call it the late 2018 lows. ASML breakdown, big giant red candle through the uptrend line right here on the weekly, following that big divergent high. Hit that 766.38 target right there and bounce. That's really nice support. Again, they're buying. This is a drop. One of the biggest semis, 30% drop. And as I said a week and a half ago, if you don't buy, then when are you going to buy? So, they're going to buy. When you have the majority of stocks hitting the 200, and it's a matter of, are we in an ongoing bull market? And I spoke to that many times before, and I'll speak to it again. If you believe that, you believe we're going to new highs, you can use these same levels I'm telling you as your stop levels. Whereas if you believe we're going a lot lower down to these targets, like I believe, then you can use the same support levels that I'm looking to see break to add on to a position or take a position. Likewise, when I give you resistance levels overhead, I don't have one here, but let's just say it was on ASML right here. Whereas if my longer term bearish outlook is bearish, then I'll be looking to short a rally into that resistance, where a bull will wait for a breakout above that resistance, because that should open the door to the next leg up, right? So that's the takeaway from these videos, guys. What I'm showing you are the significant levels and potential developments to look for and use as trading tools, for managing positions. Netflix, big old divergent high, bearish rising wedge, very nice clean uptrend line right there for the wedge. You had a initial uptrend line here. You had a shot across the bow, big drop there. Pushed up, made a marginal new and still divergent high, another sell signal, and like everything else, or so many other things, hit the 200-day moving averages. Buy programs kicked in, and the $1 million question, is it off to the races, or is this just a reflexive bounce and one last hurrah off the 200s before they give way? Time will tell. AZN, AstraZeneca, divergent high, no sell signals on this one. Needs to break this trend line, so that one's still above trend without any sell signals. Adobe, I don't have really much of a read on this chart nor an opinion. I can just say that it peaked back here. All right, I'm going to go a little faster. Some of these aren't as important, nor do I have much of a view or a read on the chart. Pepsi, the best I can do is that trend line there. Peaked back here, like a lot of stocks. Again, and this is a common theme, guys. I'm not going to go through all 100. We don't have time to do that. I've done it. I've mentioned this many times. I've showed you other charts that show it, percentage of stocks above their 200 or below their 200-day and 50-day moving averages. Many stocks, when you get away from the top tier, a lot of stocks are clearly in a bear market or well off their highs they put in years ago, many of them back in 2021, like Tesla, like Adobe and others. And so they're just, most likely in, final stage bear market rallies before their next leg down. Pepsi peaked back here in the beginning of 2023. TMUS, T-Mobile, this one has a uptrend line right there. So I'll be watching that one on the weekly. AMD, flirting with, put in that big divergent high there. Sell signal came right here and hit this uptrend line right here recently, but it's below the 200. So now for the stocks that are clearly below the 200s, remember how well these things work. This is what you want to watch for. And these are the things I'm watching for. So your bull trend, buy the 200s, buy the 200s, buy the 200s. Oops, 200s are taken out, clearly taken out, not just, not 1 week move. And so now the 200s then become resistance, just like they did here. Once you took it out, shorted the 200 exponential, shorted the 200 exponential, or the rally stopped there, I should say. They were buying the pullbacks to the 200 here. And then boom, big green candle, we took it back and we successfully back tested. So these are things that you can, look at on any individual stock you're looking at, wanting to trade. And again, look at the history of it. Don't just go, oh, because it's above the 200, it's below it, it's bearish, Randy said. No, look at, does the stock behave well? It's what I call it, to the 200. Yes, this one behaves very well. They come in and they buy the 200s in a bull trend. And when it's clearly taken out, and it's, sometimes it takes a few weeks for the masses to see it or a clear move away from it, then they start shorting rallies back to it, right? All right. I want to show you a few economic indicators, and if I keep going, these guys, again, don't move the needle. I'm just kind of giving you a bigger picture. You can see my charts, my lines. Qualcomm, that's a big one. Big divergent high right here. Hit big support recently, that 157 level right there. Cisco just hit this BOD, or benefit of the doubt, uptrend line. But look, Cisco peaked back in 2021 like so many others. Into it. Big divergent high, but no breakdown yet. So this is a level I'm watching on Intuit. When it breaks that, and you can see it dancing on the 200-day moving averages, which are acting as support, just as they were resistance here, just as they were support here. So these are the things I'm watching, guys, on a weekly basis. I'm going to get away from this so I can go to my economic indicators and wrap this video up. Let me show you a couple. Number one, the Psalm rule. You probably heard this on Bubble TV last week or so. The Psalm rule triggered in July last month, recently with the, and what is it? Even the Fed uses it. NBR is responsible for determining when the U.S. is in a recession, blah, blah, blah. The rule is relatively simple. It states that when the 3-month average of the U.S. unemployment rate rises by 0.5% or more from its 12-month low, a recession's underway. So that is triggered. The Fed even has a chart. You can find these charts anywhere. They're all over the internet. But this is, Fred is the Federal Reserve of St. Louis Fed. And so they have, you can see here. And again, guys, this is, here we are. And what I'm doing, and I know I'm making just, there's such an overwhelming case that the economy is not just heading into recession, but probably already started one, according to this, which, by the way, is at a 0% failure rate. From what I've heard, it's 100% accurate. And so it's triggered now and telling us we're in a recession. And you can see now, it's going to show you first, you're going to get that uptick, then the recession comes. The recessions are these shaded areas. And again, from what I've heard, it's 100% track rate, success rate, the track record, just like the yield curve. Now, I heard, of all people, Powell. Remember, Powell's not an economist. The guy was Powell was a lawyer. That's and so he's not an expert economist. And I heard him say in the last after the last FOMC meeting, which I mentioned here on the site, that, oh yeah, this time the old indicators that such as the inverted yield curve, they don't work anymore. We're not going to see a recession. He was using that as a case, saying it was failed, that it gave you a false signal. This indicator has not ever given a false signal. The signal does not come on the yield curve inversion. The signal where recession is imminent is when the yield curve uninverts. And so, the yield curve inversion often comes well before. And when you get the uninversion, there's the inversion, there's the uninversion, there's the recession. There's the inversion, there's the uninversion, there's the recession. All right, there's the inversion, and it came right back up. And so this is it, guys. We're poised now. It hasn't uninverted yet, but you can see the trend. And with any rate cuts, and we're going to get one most likely the next meeting, maybe 0.5 point, you're going to get the uninversion. So that's another one, again, with a near perfect track record. And then, as I've covered recently, including, just yesterday or the day before, this one is also, immutable. This is, national unemployment rate. And as I talked about, I don't need to use a Psalm rule. I've always covered this one with you in the past, and I did the other day, so I don't want to spend too much time from it. You come around these record low levels, and that's when Wall Street's giddy and bullish because employment's so strong, and it's there's nothing that can stop it. It's bulletproof, but that's where it turns. And when it turns, it never meanders around. It is a V. It's always been a V. It's just, don't ask me why. It's economics 101. Everything's hunky-dory, and all of a sudden the trend changes, and it's a vicious cycle, if you will, where layoffs and slowdowns in the economy beget more layoffs, which then consumer spending gets tucked in, and all that. Either way, you can see the clear turn, as I mentioned. And I even as I covered yesterday's video, it wouldn't surprise me today, which we saw was a little blip and a little aberration. What am I talking about? I'm talking about the little, these little ticks here. These are the little up, down. This is what makes a trend. And I haven't even refreshed this since this morning. Let's see if it's updated. Today's, maybe not. So we had a little, the employment data came in a little better than expected. Markets rallied on it. But again, this is bigger picture stuff, guys. This is why I'm talking about weekly charts, and I'm talking about these trend indicators that they don't really help tell you where the market's going today or tomorrow, maybe not even next week, but they certainly tell you where the market's likely going in the coming months, the coming years. All right, so that's enough on that. To summarize this whole video, I will be watching to see where we close the week. Will we close back on or below that uptrend line off the January lows, or will we close above it? Like I said, closing above it gives the bull or the bullish case a check mark on the weekly time frame, and then we'll just see what we do from there. Also be watching on the more in the near term, this uptrend line right here. I'll make it nice and fat. It's very clear. You have the same thing on SPY, the S&P 500, and that's the uptrend line, which will likely trigger a spark a wave of selling. You can also see down here PPO, although it did make that bullish crossover as I highlighted yesterday, we're still below the level that delineates bull and bear trends. Typically, when you're down below this red line right here, the trend is bearish. And you want to be shorting rallies into resistance or rallies back to that level. And when you're above it, as you were this whole time here, the trend is bullish. So that's still clearly below there. And that's daily time frame, but something to watch as well. I'll wrap the video up here. We're right at the 42-minute mark, and then I'll follow up either later today or tomorrow. Most certainly you'll get an update by the end of the week with where we closed on the weekly chart. Not just the indexes, but some of those big market leading stocks. This has been Randy Finney with Right Side of the Chart. Have a great day.